And India's economy shows signs of slowing. Is it time to turn the attention to other markets in Asia for opportunity? Doug Clayton is managing partner at Leopard Capital. He joins our guest host, Slim Shariani, Advanced Emerging Capital, around the desk here with us at the SGX. Doug, good to see you, and welcome back. We talked about, what is it, a month or so ago when you were up in Hong Kong. Have your views changed at all on frontier markets, or no?
I think it's the best place to hide while the global economy melts down. So. Right.
It's not just safety, though. It's also opportunity.
It's high growth with low risk, in my view.
High growth and low risk. How's that? I can see the high growth, but I mean, these are potentially pretty sharp-looking beta markets, are they not?
These are countries that have started 50-year growth cycles that are very lightly correlated with the rest of the world. And what happens in a place like Myanmar has very little. It's not influenced by what's happening in Europe. It's a domestic story there.
Okay.
I'm just curious, Doug, because Vietnam has fallen out of favor amongst emerging market investors. What lessons have been learned that we can apply to other frontier markets?
If you're going to reform, go the whole way. Don't go halfway and stop. And I think Vietnam needs to go the second wave of their reform to be on par with the rest of Asia.
So help me figure this out. Top EM picks: Bangladesh and also Myanmar. I mean, we know that everybody's interested in Myanmar right now at the rate at which it's opening up. But I mean, for equity investors, I mean, I hear they do have a stock market, but I mean, I think they trade once every 6 weeks when they remember it's still there. Or I mean, why Myanmar now? I mean, a lot of people say, look, they're just not ready for prime time, not equities.
Well, we're investing. We're setting up two funds for Myanmar, private equity and a real estate funds. These are long-term investments, but I think there'll be more and more backdoor listings into Singapore of large Myanmar business groups.
Okay, interesting. Hilo.
Doug, wait, backdoor listings of Myanmar interest into the Singapore market? Is that like an RTO or something like that? Is that how would that pass muster in Singapore?
I think Singapore wants to be a regional financial center and has historically had a lot of links with Myanmar. So I know at least one or two business groups are currently looking at listing into the Singapore Stock Exchange.
You know, right now when a lot of people are more than willing to park cash in really just safety valves without any thought of capital appreciation, but just really with preservation, the overriding priority. What's that doing to capital building in these frontier markets? I mean, are you getting more capital coming in, or is it really tough to get the money to land in these markets that you deal in?
I think there's increasing interest in FDI, particularly from Japan. If we look at what's happening in North Asia, Japan is looking at other places to invest beyond Korea and China. So we're seeing a lot of Japanese interest in, for example, in Cambodia and Laos, and definitely in Myanmar.
Slim, coming.
What about the exit strategy? Because again, these markets are not easily accessible. So you're going around it through the private equity route. But then, you know, how do you exit these things?
There's huge M&A interest within Asia from small multinationals in Asia that would like to enter the frontier markets. This is where they can capture growth, positive demographics, low penetration rates. So I think we'll see a lot of strategic buying from countries like Malaysia, from Japan, from Vietnam.
Over what time frame?
It's happening already. We're seeing in Cambodia. There's 30 banks. Most are foreign banks. There's 9 cell phone operators. This indicates that everybody would like to access these young markets.
Doug, you know, we've been talking quite a bit about some of the policy aberrations going on in Mongolia in the case of foreign investors there, and all of a sudden the government says, whoa, we didn't know it was worth that much, and we want a bigger take than what we originally signed on to. As these pioneer markets, frontier markets, however you term them, as they grow up, as they mature, as they start doing deals with foreign names, are you at all concerned about policy going through evolution too, as people realize a lot of these countries don't even understand the concept of price discovery or what assets in their country are worth right now, and as interest picks up year after year, they will gain in value. Are we going to have a lot of these countries coming in and saying, no, wait a minute, we're going to rip that up and do it again?
I think the biggest risks are in the robust democracies like Mongolia, rather than the countries where the government doesn't change very often, like Cambodia, Laos, or perhaps Myanmar in the future. But if we look, they're really learning from the West about meddling in the economy and changing the rules of business as it goes. But some of what's said is for domestic consumption rather than for actual policy implementation. So I'm not sure that those policies will really be implemented.
All right, listen, Doug, great to talk to you again. Come back, see you soon. Doug Clayton from Leopard Capital.